Dave Lafferty, yesterday the Swiss franc reached a two-year high against the euro. The uncertainties on the markets coming from the trade war are currently putting much pressure on the Swiss currency as a safe haven. What do you think? Will the appreciation of the Swiss franc continue?
I think the appreciation of the Swiss franc will continue for a little bit longer. It doesn't look like there's any end in sight right now to the uncertainty we've seen around the U.S.-China trade negotiations, as well as other countries being brought into this, Mexico, what's going on with Brexit, the fallout of the European elections. This flight to quality rally that we've seen in the Swiss franc looks like it's probably going to continue for a little bit longer.
What do you think, at which point the Swiss National Bank will intervene?
Probably not for a little while. I think the Swiss National Bank will try to stay as close to the ECB as possible. There aren't a lot of moves that the European Central Bank can make right now, so I think it's pretty limited. I think the Swiss National Bank will want to stay at least as aligned as possible and take their cues from the European Central Bank, and I don't see a ton of movement coming from the European Central Bank, at least not immediately.
Talking about the growing trade conflict and the economic uncertainty, what kind of action do you expect from the other central banks like ECB or Federal Reserve?
I think everybody is watching and waiting to see what's going to happen next, to see if the rhetoric gets turned up or gets turned down. The G20 meeting at the end of the month will be a key meeting to see if President Xi and President Trump can begin to put the relationship between the U.S. and China back on track. If they can do that, market pressure will probably relent a little bit, and that will give central banks around the world a little bit more breathing space, I think.
Last but not least, the pessimism is also growing at the stock market. However, do you recommend to buy stocks now? And if so, which?
The most important thing to keep in mind is owning stocks if that risk tolerance is appropriate for you. While we're a little bit worried about the stock market in the near term, again, all the volatility around trade and U.S. and China, in the longer run, we think earnings will continue to hold up and continue to support stocks. So while I don't think it'll be a runaway bull market, I think equities can grind higher from here.
Dave Lafferty, thank you very much.